Thursday, July 6th, market analysis, Stan Ehrlich, just after 10 o'clock California time, about the middle of the trading day. And we do have a very unusual day in progress. We gapped down very substantially on the opening in the neighborhood of 5 points. Dropped off in the first couple of hours, another point or so. I think 6 points and change lower on the day for the largest decline in the spider. Regardless, what has happened is that the S&P 500 and the other indexes so far have left a 3-day island top behind and a double top formation at that, all in one fell swoop. So how often do I see, after half a century plus, a triple day island? Never. I don't think I can ever recall seeing one. 2 now and then, very rarely, once a year, something like that. And 1 day is the common island reversal. So what are we going to have happen here? Probably going to rally back up to the low of Friday, which basically closes the island top, but it doesn't close the gap between the low of yesterday and today's high, which of course is a little bit further up than the low of last Friday. And that's when from Thursday to Friday, it gapped up, made the double top, and boom, this morning. Now, frankly, this is doing a very good job of coming all the way back. And on the 1-minute chart you're looking at right now, it has almost made new highs for the day. Not quite, but the day is still halfway over only. So I would not be surprised to see further rally to approximately the low of last Friday and or the low of yesterday. Anything farther up than that would be turning more bullish than I would expect. And this rally back up to close the gap down, the down gap this morning, may take a day or two and not all happen today per se. So the triple island at the moment is extremely rare if it survives. And not only that, but the fact that so far we've got the same thing on the DIA is rather incredible. There it is. It doesn't have quite as nice of a double top, but you could call it that. They're not as close together as the prices for the spider. Timing is the same. Overbought on the first rally highs, typical, and down we come. And frankly, today's lows wipes out all of last week's gains pretty much. And there's not much lower than today's lows to dive back in a second time into the support area, which we did just a little bit on June 23 and 26 over the weekend. So that's going to be a Monday, the 26th, the lowest low for the dip. Now a double top, now a triple island, which again, only rallying up to yesterday's lows does the job completely. Closes the island and the gap between yesterday and yesterday's low and today's high. So they're identical in that respect, but the DIA has support, I think, a little bit closer relative to today's lows than the spider. Now the Qs, unbelievable. There is still a very small gap. Wait a minute. It might have been closed here in the last few minutes. Literally, it looks like it did it exactly. 367, just a moment. This could be exact, which would be pretty unusual. It probably won't last. Today's rally high 3 minutes ago, 67.22. And what I want to know is the low a few days ago. And that is going to show up. Oop, went too far. Doggone it. Right here. As 23 cents. And what was that? 22 for a high a few minutes ago. Yeah, that's good enough for me. Plus the fact that it's right there right now and it just did the job. Okay, so it's closed the gap completely as we speak. real time. And now there's no particular reason why the Qs would want to rally up more than this now that the gap is closed. But please keep in mind that the Qs have been the strongest, the quickest, the best, the fastest, et cetera, for months, basically ever since October 13th low, which again was an ER buy signal on the bottom of the 1922 bear market and the first day at the beginning of the 1923 bull market, as I nickname it. So I wouldn't be surprised to see the Qs come damn close to these two highs, which is a double top, but there's no island anymore. There is the gap between yesterday's low and what is so far today's high. Not very far to go. That could very well stop any rally and turn it back down. As you can see, I'm not expecting any further follow through than gap closure at the moment. And that might not necessarily be today on all of the three indexes I've detailed. I want to mention the Russell 2000 has no islands, simply in resistance. A outside up day yesterday, bullish engulfing, which sometimes I've mentioned fairly rarely can be a backwards kind of reversal. This looks bullish, but I've seen it too many times exactly where it is right now at the top of a rally. I don't know how to handle that coding wise. So double top, downside breakaway gap momentarily, almost made a new low today. Doesn't have far to go. Downside move should be at least to close that gap I've been talking about now for over a month. And that was either very late May or the first day or two of June. That's it for stock market indexes. I think I'm going to be getting my gap closed all of a sudden just today with this very bearish type of price action we've had so far. Remember, everything I've said is off. If this damn thing closes really strong, for example, higher on the day, that would be a shocker. And that would not be bearish activity whatsoever. That would mean we came down, closed the gap, and turned right around and bounced all the way back. I doubt that's going to happen. Futures, we start out with a spider, of course, E-mini. No comments are different. Next, bonds. Important stuff. I talked about the cycle yesterday. Oh, this is adding up to be too good. All right, so there is a rhythm that I've noticed, and I haven't talked about cycles. One of my expertise from the 1970s, 80s, and 90s when I invented the Ehrlich Cycle Finder. Google it yourself, Ehrlich Cycle Finder. And the last, I think it was 6 or 7 events have been extremely close to almost 100% accurate. I can't believe that there's that many in a row. It didn't pan out that way in earlier history, but something has correlated here for the last year and a half, 2? Yeah, 2, because this cycle is about 3.5 months long, I measured. And it is rather phenomenal. Minor low back in here. I really don't like this one very much, and I'm just going to begin there arbitrarily. This is adequate. It's the beginning of a heck of a good rally and the end of sideways movement. So in a manner of speaking, it's a cycle low, but you'd always like to pick the lowest low, of course. Like the next cycle low is a couple of days off. Like the next cycle low is a couple of days off. Like the next cycle low was only 1 day off, and it had a bullish green ER buy signal. Pardon me. And the next signal was exactly on the right day, and the next signal was exactly on the right day, and tomorrow's the date. And how nice. We're getting oversold. And we're dropping right into a support area. Excuse me. The only thing I could hope for here was a down gap or a possible exhaustion gap, but it didn't do that. I love this setup. It looks to be very idealistic. I can't say that very often in advance, a full day in advance. Next chart, we have a very, very similar, as you would expect, situation on the 10-year notes. The same cycle has a very, very, very good track record lately, of course, and being extremely accurate the last 3 or 4 times, to the point of which 2 of them, maybe 3, are exactly on the low day. Does that mean past performance is indicative of future results? No, you know that disclaimer. So let's see what happens. But I can't tell you. This time we're below support. This time we broke the support level, but the day isn't over. It could pop back. At least closing above this previous low way back here on October 21 would be very interesting, and maybe signal the beginning of the turn if the cycle is going to kick in, which is supposed to be tomorrow, but they're not supposed to be super accurate like these, period. They're supposed to be very close. That's great. Close enough for your tolerances, great. But to the damn day, nah, I haven't seen one of those in a long time. Crude oil. Sideways trading range, supports holding. We're bouncing back up into resistance area. I should pull these blue bars to the right further, red bars, and we're there. So I'm kind of thinking we might stop here and turn right back down. Next chart is heating oil. And I can say the same thing here. We're just a teeny bit above this resistance line. That probably should be a little bit of a zone, but it's very small. And we're right there, and we have a doji type of day. Inside doesn't look like it's a higher high. If it is, it's so small, it's tiny. So it could be running out of steam. We're not particularly overbought, so I'd like to see that, but we're not. Next chart is natural gas. The same commentary goes for nat gas here. And yeah, exactly. Not only that, we had on yesterday's market at the end of the day a brand new bearish sell signal. This looks a little like a miniature head and shoulder top. It's very small. The first shoulder would be this day right here on June 20th, a rally high. You only had a day down, but that counts. 1, 2, 3 days up, you got overbought, you got the top of the market. You have 1, 2, 3 days down to a low, and then a couple of days sideways, basically. And a bearish engulfing yesterday, and now we're starting to break out to the downside. A little line you could draw off that low and these two lows. So yesterday could have been a breakout day on the bearish engulfing, and today we're a little too high at the moment, but not, that bad. That's super interesting. I'm trying to get to the red dots so I can get my ER3 short, but that ER1 is already short from yesterday's at a few ticks lower than we are right now. But we'll see how this pans out. I got a bearish sell signal that looks like a small top, very small, but sometimes these things can be enough to push that right through the bottom of the trading range, and off you go. Tierra del Fuego, down. Gold, oversold, bounced a little, looks like it's going to make new lows again. Trend is your friend. Down we go. Getting close to oversold, very close. That might mean the new low, which I think is going to happen the next few days. Maybe tomorrow, Friday, but early next week also. Might not carry through a lot lower because, again, we're close to oversold already. So sometimes oversold conditions can last for weeks, not usually. Usually a few days or less. So next, it's bearish silver. Same kind of commentary, rallied up into resistance, started to break down here. Too bad we didn't have a bearish engulfing, but not too far off of it. Looks like a new low close for previous 3 to 4 days, 5, 6, 7. A little bit lower would be 6, 7 days back. Not far from a new low from this stair-stepping move down since the double top formation, and you know what the other details are. Unbelievable series of signals and actual great performance. Bought the bottom here in platinum. Got a signal, not real good during the double top, not like this one at the highest high, which is great, and bottom, great. Next chart. Oh, I meant to say, yeah, we're a little oversold. Possibly it's going to bounce around in here for a bit. I'm bearish, looking for lower lows, but always cautious. When this thing starts to, for 4 days and 4 days out of 5, bottom out at almost the same prices. So maybe it bounces in the card, but I just think it's a bounce, and we're going to see new lows soon. Bearish. Next, natural heating, copper, sorry, basically bearish also here. A lot of stuff bearish on. So looking for new lows. What can I say? Next, soybeans. I mentioned in advance, probably at least 1 day in advance, that this market is maybe making a huge, dramatic, profoundly bearish long-term double top formation, maybe. This is my third day into saying that. I started before the highest day, which of course was on July 3rd, Monday. And the next day we had some trading on the 5th, and today's the 6th. Okay, good. We have the lowest closing price for the previous 3 days, likely. We could easily see lower lows for the day still because we're close to them. I can't tell you that this looks very interesting. I don't like the fact, and I believe I said so, when any market makes a new high for an extended period of time and doesn't stay in new high ground like this did not, it darn near closed lower on the day, but not quite. And that's not a good sign. It was steady the next day, which is yesterday, and today it's continuing down a little bit more. Nothing fantastic. Not even quite out of oversold conditions at the high of the day, but close. And tomorrow will probably be out of overbought conditions, but we'll see how it acts when it starts to hit these prices right here, 1324. That's the beginning of some modest support. And in fact, what am I saying? It almost hit it today, 1323. Yeah, something like that. So it has to close below today's low. Next, bean oil. Overbought, starting to move down. What can I say? Longer term trend, basically bearish, looking for lower lows, expecting a dip probably down to 50 or even lower. Next, meal, same kind of bearish commentary. I'm looking for new lows. Next stopping point could be around 350. There's some support in there, but that's still, 40 bucks from here. Next is corn. Well, making the new low for the move by a few ticks yesterday and then closing almost unchanged is the exact opposite of what I've been saying about new highs, and it couldn't stay there. Here it made new lows and it didn't stay there, and that was yesterday. And today it's popping back up to the highest high for the last 3 days. Now it needs to go a little bit further. It would help to close above Monday's high. Then what? Well, it's basically oversold and you got a double bottom maybe, but the highest high between the two lows, the breakout point of the double bottom is way up there. The highest highs for over a year. So I'm kind of doubting that that's going to happen. And a modest bounce is going to happen instead. 507 comes to mind, up to maybe 25, 525, and then down again. Next chart, wheat. Bear market ever since we sold the high of the rally at the beginning of the war. An unbelievable signal. So up to resistance lately, knocking off, bouncing off resistance fairly decently, accurate in overbought conditions. Down we go, and I got a sell signal a couple days ago that was in very much jeopardy yesterday and did not get hit. We came extremely close to our protective stop. We missed it by a very small amount, and today it's starting to work back down again. So we're still short from an ER3 short sale, which closed with a bit of a loss yesterday and kind of scary during the day. And today that's gone. We have a small profit at the moment, very small, but it's turned from a loser to a winner and doing the right thing. So I'm looking for lower levels on wheat, and the bearish engulfing ER sell signal a few days ago is working. Now, I did mention that I don't like doing that, basically because the RSI had already gone down a lot. The sell signal has followed the code, except we're probably going to add some code that prevents this from turning red. It already went down too much. So although everything is working exactly the way I just said, I'm pretty skeptical. Next chart, but I'm bearish. Live cattle, sell signal in the high day, came all the way back to a possible double top, bullish, overbought conditions, dropping off some yesterday and more today. Now, you could fiddle around for a day or two, but we need to see lower lows than today's lows as soon as possible and start challenging the lowest low between these two highs. And that would be 168 and small change. Breaking below that on a closing basis would dump this market down another 10, 12 points. So 56 down to right around it here. 50, 60, 70. Yeah, that's the ballpark. So actually back into a major support area. How about that? Which is 159, 158. That would be my downside objective if the double top works. Next chart, live hogs, overbought. Don't chase a bull market up like this. On breakouts, you got some exceptions, but not this one. This is banging into resistance area, way overbought, pretty damn high on the scale, and likely to turn down and make a lower low than 88 next week. Next chart. Do we have a head and shoulder top building? Well, maybe. We're coming up to about the right price level, which would be about 278, give or take a little. And the timing looks about right, plus the fact that these two rally highs were overbought in each case, and the low looks to be about right. Now, this low back in here, you could draw a neckline off of that if you wanted. So I'm giving it a couple more days to get up a little bit higher to 276, give or take a little. And if it starts to turn around and slide back down again, I'm going to start talking bloody murder head and shoulder top. But that's a long stretch from the moment. I think it should happen probably next week, timing wise, maybe late next week. And there are two bumps in here. So there's a possibility you're going to have a little double bump on the far right, which hasn't happened yet. That's something to keep your eye out. Remember, these patterns are very symmetrical historically in a variety of ways. Next chart. Cocoa. Got overbought, didn't care, made a little bit new highs, starting to back up. Divergences like crazy, a quadruple, which is extremely weird. That doesn't happen very often. Your highest high did give me a bearish engulfing ER sell signal, which didn't work. But that was the highest high in the RSI. That's interesting. So it kept on climbing price-wise, but the RSI did not make higher highs over the last approximate 3 weeks. That's the divergence I'm talking about, starting on the date of June 12th. That's dangerous as hell. We could see this market start to get below 3,160 awful quick. Next chart is cotton, sideways, tested support, got oversold, bounced a little, back down slightly the last day or two. I don't know. There seems to be a little bit of a bearish tinge to this big sideways trading range that we have been involved in since last November. The reason I say this is the highest high was last November. Then a slightly lower one and almost the same again. This time up, it didn't get quite as close. And in the middle of all that mess, we've got a lower low, but not since March has it been lower than that. And they're rising a little lately. I'm going to tell you that if it gets below the low of June 27th, and that was 76.81, it could start something going south. Pretty important too. I would consider that a minor beginning downside breakout type of situation. Next chart, sugar to sweet, topped out, double top, maybe triple. Minimum downside objective fulfilled a few days ago in an oversold condition. It's bouncing or bounced. Today's high is not higher than yesterday. Yesterday's high was right up against a little bit of resistance, not anything really major, but it stopped so far and slipping today. I expect to see lower lows for the trend here for the last couple of months very soon. And coffee has a new, brand new, barely hanging onto a thread, bullish engulfing ER buy signal right this moment. We might just see a downtick below 159.00, in which case I think the green is going to turn back to yellow, because that would now, oh, it went up 159.15. So if it dips, if it closes or dips below 158.95, I'm going to say, what was the close yesterday exactly? The close yesterday was 90, 158.90. So going below that level, you do not have an outside up day. You have an outside slightly lower day, in which case the bullish engulfing green is not legitimate, and it will change back to yellow. Again, if the closing price, which is critical, is here, give or take, or higher, it will be an official buy signal. We might see one. We have to wait until the close, meaning tomorrow, to see if that stayed green or not. And we're back to the S&P 500. You have a great day. Talk to you tomorrow.